What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible. So without further ado, let the intro roll and I will see you on the charts. The pair that I want to speak about into this video is Euro USD, so the most traded pair in the market. Now, why do I want to speak specifically about Euro USD? Because the pair is very near to providing to us a good trading opportunity. So obviously I want to show you exactly what we can be looking for on it. First, I will be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds, so the big players in the market, are doing. And obviously if you're able to track how they are shifting their positioning and time, you do have an advantage over your competition in the market. And by the end of the video, by using the combination of our technicals and our order flow analysis, we will be able to understand where we have the highest probabilities for a trading opportunity on it. Now, starting here from the monthly time frame, what do we have? Now, here on the monthly, we can see that Euro USD has first created a very strong impulse to the upside, creating a higher high, and then it has started a retracement. Now, generally speaking, a high in the market is a strong resistance area. However, when a resistance zone in the market is broken to the upside, the previous resistance is now turned support. And that is in fact exactly the level that the market has just tested. The market has just broken and tested the previous resistance, which, now that the market has broken it to the upside, is turned support. So here in the monthly, we have an impulse that is retesting the previous resistance turned support, and we can expect the market to provide a rejection to the upside. Now, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of this impulse, what we can see is that we have a perfect 50% Fibonacci retracement exactly inside of this area. So we have a 50% Fibonacci lining up with the previous resistance, which is now turned support, which creates a confluence of support, which the market is testing and from which we can easily expect the market to provide a rejection to the upside and possibly the creation of a higher high for the completion of this impulse correction and impulse pattern to the upside. So here on the monthly, it's pretty easy to identify that the level that the market has just tested is this confluence of support coming basically with the 50% and the previous resistance turned support created by the 50% with the previous resistance turned support. So on the monthly, everything is quite clear. We do expect a deeper rejection to the upside and completion of this impulse correction, impulse pattern to the upside. Going down on the weekly, what do we see? Now here on the weekly, we consider the market has just provided a nice impulse, and at the moment, we are creating this corrective movement. When you see a situation like this, basically the market is creating a channel to the downside. Usually what happens most of the times is that then the market creates the continuation to the upside, which, as we have already identified from a monthly perspective, is exactly what we expect. Going down on the daily time frame, what do we have? Now here on the daily, the price action that we have is very easy to read. In fact, I had actually spoken about Euro USD quite a few times in the past. I spoke about Euro USD when the market was here. I made a full breakdown explaining all the reasons for which from here we expected the market to create this move to the downside. And in fact, that is exactly what the market did. Then we had the creation of this overextended W formation. And when the market was here, I made another breakdown explaining all the reasons for which from here we expected the market to create a move to the downside. And again, that is exactly what the market did. Then we had the creation of this M pattern, and from here I made a full breakdown explaining all the reasons for which we expected the market to provide this move to the upside to go and complete the pattern at the previous support, now turn resistance, and again, that is exactly what the market did. Then we had the creation of this M pattern, and from here I made a full breakdown explaining all the reasons for which first we expected a retracement and then the continuation to the downside, and again, that is exactly what the market did. And from here I explained all the reasons for which we wanted to see this move to the upside, and in fact, that is exactly what the market did. And by the way, I will link in description all this previous analysis. You find all this previous analysis linked in description, so you can go and check it out for further reference and more free education. If you have any requests for other breakdowns, make sure that you leave it in the comment below, and also make sure you like and subscribe. Now, at the moment on the daily time frame, we have a market which is currently providing this M pattern. Now, as we just said, after an M, we want to see the market create a move to the upside to go and complete the pattern at the previous support, now turned resistance. Now, if we go and see what we have from a COT perspective, so commitment of traders perspective, which is what hedge funds are currently doing in the market, what we can see is that with the last report, hedge funds have increased their net positions from 137K to 140K. So they have been increasing their net positions, adding 4K long positions and reaching 220K long positions and 80.7K shorts. So overall, we have way more longs than shorts. Net positions have just started again, increasing with more longs getting added, meaning that we can definitely expect EUR/USD to complete the M formation at the neckline. So how we will be approaching this potential opportunity with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily time frames, those are the best time frames for the direction of the market. But when it comes to confirmations and entries, the best time frame is the 4 hours. So with students, what we will be doing is monitoring price action from a 4-hour perspective during this move to the downside. And we will be waiting for the market to shift from a 4-hour bearish market, as we have right now, to a 4-hour bullish market. And only if the market will shift from a 4-hour bearish to a 4-hour bullish market, only at that point, we will be adding EUR/USD to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and for the market to go and complete the pattern at the previous support, now turned resistance from a daily perspective. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also comment below and let me know which pairs you would like me to cover in my next videos. Also, make sure you go and check out the mentorship program. It's a very complete program. The link is in the description. First, you get all the rules of my rule-based strategies, and then you trade the strategies with me. Each and every day, you get a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as having me answering all your questions every single day, including the weekend. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.